Hey everybody, this is Jose here, ready to get started in just a few seconds. As always, before we get started, it's always very helpful to have a quick sound check. So a quick message on the chat box with basically tell me that you hear me well and we are ready to go. Please go ahead and do that. Thank you so much. Thank you so much. Very good. Hey Mark, I see you're asking Joe about the traders meeting section in the website. Very good. I'd love to talk about this briefly with you guys as we start. I'd love to know if you had the chance to get in there and take a look. Perfect. Top of the hour, everybody. Thank you so much. Let's get started with the session. Welcome, everybody. This is May 1st, 2022. This is the top session that we do normally from time to time on the weekends, typically on the Sunday, where we look at top as a platform and we try to understand better the use of it, which is very often directly linked to various trading strategies, way on how to trade, and these conversations are often quite rich. So welcome to the session if you are new to it. And of course, welcome as well if you are one of the usuals in the sessions. Not sure if I said it. My name is Jose Blasco. In case I didn't say it, and before we get started, as always, I would like to highlight the disclaimer on the upper left side of the screen. Please read it carefully. This is important information, as always, and I'm counting on you to read it completely. Okay. Very good. Perfect. Okay, so the plan for today, we're going to be looking at the platform. Often talking about the use of the platform implies some trading lectures. Of course, ready to help, ready to get your questions, ready to provide plenty of answers. So anytime you have a question, just type it on the chat box. If you're new to the sessions, do not be shy. And if you are watching this recorded, so in a moment, I'm just going to share the website and I'm going to show you a place where you can post questions and get answers as well, okay? Perfect. So let's begin, everybody. This is actually the page I was mentioning. This is tradewithufos.com/Jose, which is a page where you can come in here and there is a live sessions note section that we are in the process of start using it. This is a spreadsheet that we'll use to document everything we do, so it helps better as a guide for you to be able to do it at home by yourself, etc., etc. And then when we come down all the way to the bottom part of the section, this is where we find the question section, where you can search for answers by typing, questions you may have. If there is no answer that you're looking for, you can always post your own question by clicking on the Ask Question button, and a new window will load, which will allow you to type your question. And ideally, you want to be detailed, you want to upload screenshots. You have to be logged in for this, okay? So I didn't say, that's why it doesn't show, but if I was logged in, it would show here, okay? So this is the place where you come. If you're watching this recording and you have questions, you can certainly post your questions here. And then the other comment that we were having on the chat box a moment ago, as I read, which is related to the traders meeting room. So it's right here, traders meetings. So when you click on it, it brings you to a place which is going to show on the screen in just a moment. And okay, same story. I need to log in. So if I log in, then here it's going to show you a meeting room where you just enter your name and that's it. You're in the room. Okay. This is a place for you guys to meet at whenever it works with you. There is no sessions that are scheduled for meetings to take place. It's a matter of you getting organized between you guys. This is just a place for you to meet, which hopefully is helpful. But again, when to meet and which subjects to address when you guys meet, it's all about you guys. Okay, so that's why I've said multiple times that feel free to use the chat box to share email addresses, phone numbers, WhatsApp numbers, whatever it is that you want to use to communicate with each other, so you can meet in the room at a specific day and time. Just feel free to share during this session in the chat box. Remember, this chat box is private. Only the ones of you attending the session live will get to see what is being typed in the chat. Even if you were to watch this session recorded, then you would not see the chat. Okay, so in other words, it's only for the ones of us here now. So if you want to share your personal contact information, you can do it, so you guys can communicate between you two. We cannot, as a company, share your personal information. It would go against privacy laws. But certainly, if you guys are open to share in the chat box, basically that's your decision. And I'm just facilitating the place where to do the sharing. But the sharing or not is your decision. Okay. Cool. We will probably organize more tools. Okay. For example, maybe a WhatsApp group, things of that sort, so you guys can actually communicate more easily as well without needing to share anything. But so far in this phase one, you guys can go ahead and do that. Okay. Cool. Yes, exactly, Mark. I'm just reading your comment now, and yes, you need to trade emails. That's what it is. Very good. Okay. So anyone got in the room by any chance? Okay. If you guys got in the room and you like to share how did it go, I'd love to hear. And if you haven't, it's fine. Okay. Anyway, let's get inside top and let's begin our top session. Okay. So we have been having a collection of lessons recently to talk about the matrix. Okay. And we are not done yet with the matrix. So the subject for today, it's going to be the matrix. Okay. And I'm going to continue working on it. Okay. So we know about the matrix a lot already when it comes to the various sections, the scans on the top, additional filters. We also have advanced filters based on various tabs. We can save the results in various lists. So all of these, we've been discussing it with a great level of detail already. So basically what I plan to do in the following top sessions, probably I would say probably a couple of sessions to do that. It's to go over the scans that are built in, knowing that you could combine those scans with other filtering conditions and save it as a scan list and refilter the scan list with more scans and more conditions. So you can do so many things, okay? But I'm just gonna go one at a time because in the end, the matrix is extremely powerful. Well, it's really, really powerful, and it works very fast because it works on the cloud. It works in the cloud. It works real time. So when you perform a scan, you get the results immediately. So it's very powerful. But at the same time, if I was to use a different adjective, I would also say it's extremely confusing, given the vast amount of different scans available, the crazy amount of possibilities for you to filter out market opportunities. There are so many things that probably you may have found yourself at some point, not knowing where to start. Okay, so we're gonna break it down one step at a time. In the end, the idea is that every one of those scanning techniques, every one of those filtering conditions, and every one of those combinations, you use them in a way that align the rules of your trading plan. So the way you trade is assisted by the matrix, but the matrix basically kind of forces you to follow your trading plan while you get the benefit of saving crazy amount of time by not having to do any research manually. Okay, that's the idea. Okay, so we're gonna do this. Okay, Jose must be having issues signing in. I heard from him earlier in an email. Not sure what you mean by that, guys. I am delivering the session here. Let me type in the chat box just in case. Okay, I'm just typing a couple of notes on the chat box. Okay, I can see that. Yeah, you guys are not seeing me. Okay. One moment, please. Yeah, so please let me know, guys, if you are now seeing me live. Okay, probably it's a matter of clicking on the play button on YouTube, and that should allow you to see me. And okay, perfect, Joe. Yeah. I okay. Perfect, guys. Okay, yeah. So I'm just guessing, unless I misunderstood your comments on the chat box. I am guessing that you guys were typing on the chat box, but you didn't click the play button on the video stream, and I guess that's why you would not see me, you would not hear me while the session was running for a few minutes already. Actually, funnily enough, I was commenting on your comments when it comes to the meeting room and all of those things. So yeah, I guess that you guys will have to watch the beginning of the session later. So I don't need to go back to that. Okay, let me share very quick on the chat box the direct link for you guys to not to have to wait for the recording. So the moment the session is over, you can go ahead and click on the link and watch the session from the beginning. Okay, so just give me a second, guys. I'm just getting the right link. Just don't want to get confused and give you the wrong link. Let me see. Yes, it's here. Okay, I got it. So now I'm just gonna post it on the chat box. Here we go. Cool, perfect. Okay, so you have it. Okay, you make a note of that link, and later, as the session is over, you can just play from the beginning immediately, and you'll get to hear what I commented on your comments when it comes to the use of the trading room and all of that. The use of the meeting room, I meant to say. Anyway, so let's begin. Let's continue, I should say, with the matrix. Okay, and we're gonna start looking at the scans one at a time. We'll start from the very top. Okay, so when we go to the very top, okay, and let me zoom in. So we are talking about scans that point at all symbols, and there are two groups: all stock symbols, and to be honest, it also refers to stocks and ETFs. Okay, it really depends on what you have selected here. Okay, or here, how you selected stocks and ETFs or only stocks. Here, stocks means whatever you have selected as underlying asset. And all option symbols, okay, represents to symbols of the options themselves. So we got close to 9,000 stocks in the US market, like 6,000 or something like that are optionable. So when you select all symbols, all stock symbols, basically you're applying filtering conditions below to those, 9,000 stocks, okay? They call it 9,000. Of course, again, if you have selected all or you have not selected all, if you have selected stocks or stocks plus ETFs, all of these will also have an impact in the results. But again, basically you are scanning for underlying symbols if you do that, which is kind of like probably the classical approach for most traders. They look for specific market condition or market behavior on the underlying asset, and around that market opportunity, that potential opportunity, they put an options play in place to take advantage of such opportunity. Okay, so this is a pretty normal way to approach scanning. The other possibility is to scan for option symbols. So if you scan for option symbols, now you are looking at the thousands of contracts that are available to be traded on those 6,000 plus stocks that are optionable in the US market. So we are talking about a few million contracts, okay, that could be scanned. And notice when you select all option symbols, automatically the tab options filters is activated, where now you can apply conditions to the options contracts, okay? Conditions with price, conditions with implied volatility, delta, whatever, in the money, out of the money. So then you can scan, and the results will obviously also point at some underlying symbol, but beyond the underlying symbol is looking at a specific expiration date of an option, being either a call or a put, C for call, P for put, and a specific strike. Okay, so 17 call that expires in March 20 for American Airlines is an option that meets the conditions above. Okay, if instead of selecting all option symbols, I was to select all stock symbols, then the options filter tab, it's not even available. Even if I click manually on it, nothing can be done because I am not scanning for options contracts. I am scanning for underlying asset classes, ticker symbols, okay, which is a different approach. So as we go through the various scans available, there will be cases where some of the scans are looking for option symbols. For example, this one here, we'll talk about it. Where other, for example, this one here, just to pick one randomly, so they are returning stock symbols or underlying symbols. The majority, like 90% or more of the scans that are pre-built, they are looking for underlying asset conditions, which then could be translated into options opportunities, okay? And less, let's say 10%, and I'm not sure about the accuracy of these 90% and 10%, but you get my point. 10% of them are scans that are looking for option symbols. So when you click on it, okay, you will get a symbol for the underlying, but you also get the expiration date, the strike, and the put or the call, P or C. Well, when you are looking for symbols, when you are clicking on scans that are looking for underlying asset class symbols, so then you will have the symbol, okay? But then notice how it doesn't say on the right anything about expiration date, call, or put, because you are not returning the symbols for the options contracts, you are returning the symbols for the underlying asset. Okay, so just keep this in mind because at times it could get confusing if that's not clarified. And I know I talked about this in prior sessions as well, so probably this is very clear, but because it could be confusing, I wanted to rephrase it and review it so it's clear. Okay, so basic scan. Okay, so basic scan, that's the first item in the list that provides me with a fairly lengthy list. Okay, all symbols is basically only giving me two choices. When I look at basic scans, it's giving me a list. So I'm just gonna read it first. Okay, so you have point gainers and point losers. You have percent gainers and percent losers. You have 2-month high or low. You have 52-week high or low. You have broken above or below the 50 moving average. You have broken above or below the 200 moving average. You have some volume conditions, okay? And then you have some weekly gainers and losers and monthly gainer and losers. Those are the conditions that you have here, which are pretty basic type of conditions, but definitely very, very, very useful. Okay, so again, it all depends on the trading plan. I'm just going to give you a few examples on how some of those conditions could be used. Hopefully, this open your eyes to various possibilities. But again, many other combinations are possible. Okay, the sky is the limit, really. Okay, so for example, let's say you are looking to buy stocks at a very low price. Okay, so and also you define low price as the 200-day moving average. So what can you do? Well, you can come in here and select, look, basic scan, give me stocks that have broken below the 200-day moving, the 200 period moving average. I'm just gonna make this blue color grouped with a blue color. So when I click on it, I'm gonna be able to see that on the charts. So when I click on the first one, for example, ACRE, and this is a daily time frame. If I was to add on the, you know what? Let's use a blank chart, so that way it's less confusing. So this is a daily time frame. I'll make it blue as well. Here we go. So okay, here we go. And now what I'm going to do here is I'm going to add a moving average, okay, which is going to be 200. Okay, and it's going to be simple. Okay, and I'm going to click OK. So notice in this case that this particular stock went below the 200 moving average. Okay, so the 200 moving average is a market condition that typically, okay, if you were to talk to market analysts or you were to read a technical analysis book, probably you would be told that being above the 200 moving average is very bullish, being below the 200 moving average is very bearish. This is kind of like the perception. So you are in a bear market when you are below the 200 moving average. You are in a bull market when you are above the 200 moving average. Okay, and you can see that every time price comes to the 200 moving average, there are often very powerful reactions to it, assuming you are in a bull market condition, because that moving average is very classical among fund managers, among market analysts, among companies or professionals that provide trading signals for traders, and therefore again these price points may represent intense buying and therefore those turning points. So now if the market is below the moving average, so this could be seen as a very bearish condition, right? And that's how it's normally seen. Okay, but let's say that instead of looking at the moving average with this particular approach, you may be looking at the moving average as a way to define what is cheap and what is expensive, okay, which is often, to be honest, in my mind, at least based on my trading style, a bit more useful for a trader compared to the approach that some market analysts would have about simply being bullish or being bearish. Why? Especially because when using options, okay, let's say we go back to this particular day where we went below the moving average. Well, guess what? You have a collection of green UFOs down here where, I'm not saying because you are below it's cheap, so let's buy the stock, because if you were to do that, you would get very badly hurt because the stock went much lower, isn't it? But knowing that those green UFOs are down here, maybe selling puts down here and even combining puts with sell puts and then buy calls, all sort of combinations that we do often, well, could be a very smart approach to either collect premium at a price point which is very safe, or if that stock was to fall enough. I don't know if it went that low. I don't think it went that low at this time, but now the stock is going back up, back in bullish mode, and again, whatever premium you sold down here, so now this has expired and now that credit is yours. So in other words, it's kind of like, while many people below the moving average, they will see this as a bearish condition. Well, it takes a lot of time to go below a 200 moving average, which means the price should have been traveling to the downside for a long, long time, and therefore many times, being below, and not only right below, but just being deeply below, it's often the recipe for a powerful turning point to go back above. Okay, especially when we are dealing with equities, where we all know what's happening to the S&P as an index, for decades now, which just keeps going higher, given how the markets are constructed and the fact that 401k money keeps entering the market even through a pandemic and all of those things. So again, having a bullish approach to trading could make a lot of sense in the world of equities, but the key question is when. Okay, when do you enter, when do you exit? So a condition of this type could be very helpful. Okay, so very easy to scan with the matrix. Okay, let me float it. Okay, very easy to scan with the matrix. Wait a moment, is that no, this is not my matrix. This is not the one I was looking for. The one I was looking for, I believe I saw, yes, I have it in my other monitor. That's the one I was looking for. Sorry for that. So so 200-day moving average. Okay, that would be an idea. Okay, so now going back to basic scans. Okay, let me speed up a little bit because that was a long explanation for such a basic scan, even though the fact that it's basic doesn't mean it's not very useful. This type of scanning could be very powerful, to be honest. But you may want to be a bit pickier and be like, okay, not only I want it to be below the 200 moving average, I also want it to be below the 52-week low, meaning that it's been falling lower than the lowest price point since a year ago. 52 weeks is a year. So now you can go ahead and add a second scan, still using the basic scan family of options. And here now you're going to be like new 52-week low. Well, in this case, notice that none of the stocks available in the market at this moment in time went below the 200 moving average, and on top of that, also below the 52-week low. Okay, so in this case, you don't have it. But again, if you had results at this moment in time, really it is giving you conditions of stocks that have dropped a lot. And while that doesn't mean they're going to stop dropping, again, assuming you have the right UFOs and you have a good application of options, when you're putting this in place, it could be very useful. And again, the point of the matrix is that you scan it, we're using no time. Another type of combination, without being that picky, but being smart, adding some, smart conditions to the mix as well, would be, okay, I'm going to leave it as 200-day moving average today, but now I'm going to use an extreme condition of volume. So for example, stocks reporting top volume or even beyond top volume today, unusual volume. Okay. Well, if I was to do that, okay, so I'm going to click AON, for example. Okay, so again, we have that stock which is below the 200 moving average. Okay, but now if we look at the volume, so let's volume as a study right here. Okay, so what's happening? So we have a huge peak of volume here. Okay, I mean there have been times where the peak of volume has been greater, but it's a pretty interesting peak of volume. And again, the beauty of having these very very high readings of volume, probably they represent that whoever wanted to sell sold, and that's why that market felt so hard, because there were no buyers, because it was all about selling. But if so many people have sold, there may not be anyone left to sell anymore. And if no one is left to sell, then the only choice now is to buy, and therefore the stock is likely going to go back higher. So again, same story. So the market is falling very hard. You have this green UFO down here. You may want to start considering selling puts or some sort of that kind of an approach. Again, all of this is just to give an example. Everybody has different methodologies on how to trade. But basically, that would be one of my approaches. Look at that UFO as a place where I may want to acquire shares, sell puts there. Maybe I don't do it naked. I sell puts and buy puts. You've seen me do this live many times, so you know what I mean. But basically now, because so many people have sold already, this is kind of increasing the probability of this to turn around and go back higher. Maybe not that much higher because there is a red UFO there, but maybe there is some room to make some money from 287 to 200 to 300 plus. Okay, and those are opportunities that could be executed and, most importantly, found very quickly with the basic scan. So we're not even doing anything fancy, but by combining these particular approaches to trading, so these particular conditions, so you are finding quite unique opportunities. I mean, look at the list I just got here. So it's not like it's that many. Okay, it's not like it's that many, meaning that I'm just being a little picky here with the opportunities. Okay. And by the way, when I say picky, I don't mean it as a bad way. Actually, I mean it as a good thing, right? Because the more picky you are, in theory, again, depending on your methodologies, the more picky you are, typically you would expect greater results, right? Because if you take every single trade, you are probably taking low quality trades. If you are pickier, probably you're relying on more quality opportunities, and instead of just trading whatever just because you want to trade. Okay, cool. So again, basic scan. If you have any question about the basic scan, so feel free to ask. I think it's relatively self-explanatory, but I wanted to give you a few examples or a few possible applications to open your eyes and give you ideas or give you clarity. So when you start using this, you know where to click. Because again, I would not expect any of you to click on every one of those choices. In the end, I mean, you could experience with the platform, especially when you subscribe to it at first and you don't know what's what, and you just keep clicking everywhere to discover the platform. Great, but in the end, the idea would be that you end up using a very specific set of parameters in your scanning, and that's how you trade. Okay, instead of using everything every time. Okay. So I'm going to move to the next group, which is the momentum scans. Okay, I would certainly appreciate from you guys a quick confirmation that you guys are with me and that all is good with the basic scans. A quick okay we do. Please go ahead, Mark, Joe, everyone else who is now connected with me live. It'd be great if you could confirm. And as you do that, I'm going to start looking into the momentum scan. So I am now zooming in here. And again, momentum scan, as the name suggests, is also, let's call it self-explanatory, even though sometimes there is a lot of room for interpretation. So I want to guide you a little more with examples, as I've done with the basic scan as well. Thank you for that, Mark, Joe. Very appreciated, my friends. So the momentum scans, okay, they are looking for momentum. And again, there are many different ways on how to define momentum in trading. Even as a concept, you may see market analysts defining it in ways that are completely, totally different, actually even contradicting each other at times, which is fine. It's just like, trading is just like many other areas, right? Many other niches, like, doctors, for example. Many times, they all went to university and they are professional, but they contradict each other because there are different schools of thought. So again, it's not a sure thing, right? So we have the same thing here, so not an issue. But in our since our platform is being used by everyone and everyone trades in different ways, so we are trying to be very generic with the definition of momentum, and we are providing momentum measurements which are very diverse and often contradicting each other. For example, we are using the term momentum attached to Bollinger Bands, which to many people, Bollinger Bands will not measure momentum, they will measure volatility. Okay. We are using the term momentum linked to the word point, which to some people, point movement means nothing because 20-point movement in Amazon as a stock is nothing versus 20 points of movement on a $5 stock is like quadrupling its value. Is huge. So again, it all depends on how you trade. Maybe you are a trader who have selected a list, right? So remember, we can save list. So maybe you have selected a list of stocks which all trade between $15 to $20 per share. Why? Because maybe your account size requires that type of stocks. And then, you are looking for point gainers, okay, which to you makes sense from a momentum point of view because all your stocks are within, $15 to $20 per share. So again, just keep that in mind. So going back to what I'm saying here is momentum here is being defined as points, okay? Points to the upside or to the downside, so gainers or losers. Percent, okay? So percent to the upside or percent to the downside, gainers or losers. All of this is being measured since the open. So since this is measured since the open, I guess you are with me that this is designed to help intraday stock traders. Okay, this is not designed for the swing traders or the investors. This is for intraday trading, right? Then we have Bollinger Bands break to the upside or the downside. Okay, this is based on a daily time frame, so this is definitely very useful for the swing traders and even for investors. And then we have a special scan here, which is a primary pivot. And then we also have options for the primary pivot. So those two scans go together, even though the first above gives you results in the form of underlying asset symbols, where the second gives you results in the form of options contracts related to the underlying asset, which are the results from the prior scan. So let's look at it one at a time, okay? And you will understand. So for example, if I was to look at momentum scan and I was to look at top point gainers since the open or top percent gainers since the open. So if I look at that, okay, and I look at, for example, CYTQ, right? And I'm back to my chart here. So notice the huge long bar above the open that took place in this particular chart. That stock went up 11.52%. So again, if you had scanned for this type of measurement, let's say 10 minutes, half an hour after the market opened, and you have certain stocks showing such a great level of strength in a specific direction. So let's take a look at what happened to that stock. If I look at it in a 5-minute time frame, so look at that, So it just kept going, right? So maybe that move is the reason why the stock shows up in the list. And then what you're doing is, you're waiting for some sort of a retracement to try to get back in and make some money as a continuation of a move in the direction of that incredible momentum or strength. So this could be indeed a valid trading application if that was to be your style, okay? Going back to the scan here, the next type of scan that we had here was the breaks of the Bollinger Band. So I'm going to kill two birds on one stone here. For example, Bollinger Band break to the downside, right? So for example, we have AAP. So if I look at AAP and I go back to a daily time frame and I enter Bollinger Band, right? So we can see how the price is breaking the Bollinger Band from the bottom part. So again, this could be a very good condition as well for certain traders who are, for example, credit trade traders that they have a UFO here. They may want to sell bull put spreads here while the market is on the other side of a Bollinger Band, which typically implies that sooner than later you're gonna revert back to the mean. Okay, so outside the band, back to the mean, outside the band, back to the mean, outside the band, back to the mean. So again, it's not always the case, but there are many cases where that's the case, and as long as you have the right UFOs and everything else, so this could be a very simple scan which allows you to filter for those opportunities. And by the way, this scan could also be combined with the prior scan, which was basic, like the one where we were looking for stocks below the 200-day moving average, right? So of course now you are filtering based on two categories of scan, momentum and basic. Okay, and now you are being given some specific results. For example, in this case, ADP, where you are below the moving average and also below the band. Okay, so all of those things hopefully give you ideas on how to use the tools and what to search for depending on your trading plans, or maybe you are building your trading plan and actually these ideas are helping you to put a plan in place. Okay, because that's another, maybe this is kind of like the opposite of what I said before, but I would say it's kind of just as useful or valid, where you may be a trader who is newer to the market, or maybe you've been trading for years futures, but now you're ready to start trading stocks or options and you have not done that before and you're getting organized at this moment in time and you are putting a plan in place. And well, one there is a collection of decisions to be taken when it comes to rules and conditions. Well, the matrix may be a source of ideas which help you to define the rules you want to use. Okay, and then you have a way to scan for this mechanical with plenty of time saved, thanks to the fact that the matrix runs on the cloud. Okay, so that's another possibility. Now, the primary pivot breakout for vertical spreads, what is that? Well, I need first to explain what is the primary pivot. So when you insert your pivot indicator, okay, so it's basically showing you those little triangles, right? And the primary pivots, okay, out of, again, depending on how you have it set up, okay, my settings are 5, 13, and 21. So my primary pivots are the ones that are the strong ones. So if I was to disable medium and weak, and I click OK, I'd be left only with this guy here. Okay, this is the primary pivot. So if I was to draw a line at this price point, based on many schools of thought, this price point would be seen as a strong resistance, expecting that if price was to come to here, price would bounce and go back down. But there are times where price goes back to this line, which is lining up with a primary pivot, and instead of going down, it breaks out. And if it breaks out, typically the expected behavior would be that what was resistance becomes support. So then if the market was to retrace back to this line, from there, a continuation of the move may happen. Okay, that's the thinking. So in other words, the idea behind this scan is to scan for conditions that look like that, where the market is breaking out of that primary pivot. Okay, that scan, by the way, if you notice, has been designed to only scan for moves to the upside, not for moves to the downside. Again, because it's typically applicable to equities, and when it was designed, that was the thought, behind. That was the thinking behind this development. Okay, so primary pivot breakout for vertical spreads. Okay, so if I scan for this, by the way, we all know that the market was crashing like crazy on the last trading day. So if I scan for this, well, actually, I do have some results. I thought I was have none. Okay, interesting. So we have AVT, for example. Okay, and if you see AVT, so you can see here how that primary pivot, okay, it's basically has been traded through this last trading candle, and so now probably has been retracing, and from there a continuation may take place. So that's the type of scanning that we are doing. And by the way, I was convinced we would have no results given how strong the market dropped in the prior trading day. So I was kind of convinced we would have no results. But what we do, that's great. Perfect. Good example. So if instead of looking for that primary pivot, breakout vertical, which is again a momentum scan, right? So you have the breakout is a momentum. We were to scan for options for primary, okay? So we're going to have now, okay, wait a moment. Let me uncheck this. So we're going to have now a collection of options, okay, symbols that are, in line with those opportunities. And now you can come to the options filter and you can play with whatever your rules are. Maybe you want to use out of the money options to do the spread because you are really betting on a breakout and you want to keep the trade very low cost and you want to use out of the money options. So maybe you're going to do something like that. and you want them to be liquid, and maybe you want to make sure that your deltas are, you have no intention to set a minimum, and maybe your maximum is zero point 0.3. So maybe that's what you're looking for, and when you scan this way, so actually maybe I want to restrict it there. Some of those stocks are not. Oh, sorry, that was the price. Let me do this. Okay, so the average volume and the open interest probably is a bit too much. Yes, correct. So now, if we're looking for open interest of minimum of 100 contracts, notice now that the 50 call, the 34 put, the 37 put, and the 38 put, those are valid options that meet our conditions of delta and open interest in this particular scenario, and they are all out of the money. So now, with those two things in mind, now you can go ahead and construct your trade, easily. Based on the conditions that we just said. AVT or AVT. Sorry. There we go. That was the setup. Okay. So again, pretty interesting scan if you're looking for breakouts. Okay. There are times where this could be very useful. I'll give you an application of this. Let's say, for example, you have a portfolio where the market is in a very bullish condition, okay, and you have been creating a portfolio of stocks, and let's say you have, I'm just going to pick a number, 8 positions where you're long. Maybe you have a little bit of a non-directional trade approach on your portfolio as well. Maybe you have a couple of iron condors. Maybe you also, as a hedge, and just in case, maybe you have a couple of short positions. So basically, if you look at the overall delta of your portfolio, is quite positive delta. But next thing you know, the market is very, very strong. And because the market is very, very strong, next thing you know, you get to hit many targets, and next thing you know, you are out of many, many positions. Okay, and that's a good problem to have, because that means that you collected the profits you were expecting, and that's great. But what happens to your portfolio now? Well, your portfolio now drops on deltas, and now you end up with a very small delta value, where the market is showing out of strength, and you don't want to miss the move. Or maybe now you have too much of a hedge in your portfolio, and you need to add positive delta, because if the market keeps going higher, then those hedges are actually going to hurt the account. But again, if the market is in that very strong condition, there may not be decent retracements of stocks that are really coming back down in a proper, safe manner. So in this case, scanning for breakouts could be one way to be, in a way, a bit more aggressive. Depending on your methodologies, this could be acceptable or not. But in another way, not to miss the boat when certain moves are going to start happening. And if you just keep waiting for the retracement, that retracement may never happen. There are conditions, there are market conditions that sometimes happen this way, and this type of scanning, looking for the breakout of the primary pivot, it's definitely something quite useful. Okay. Now, with all of this said as well, I will point at the fact that typically this is a little bit of a riskier approach to trading, because, like, for example, if you look at that stock, right, AVT. So, I mean, not too long ago, you may have an opportunity. I'm not sure about that, but let me go back in time. When the stock was falling below the Bollinger Band. So look at that. You got a green UFO there. To be honest, the price would have gone through this, I believe. Yeah, or maybe not. Kind of, yes, kind of not. Okay, so the price reacted to that UFO. Sometimes with stocks, of course, we know stocks depend on the sector and the S&P. It was not a very bad, if you wish, penetration of that UFO. It reacted fairly well. And, if you had purchased more or less at this price level, so that would have been a very good trade. Way better than waiting for today's price action, where now you are trading at 43 instead of trading at, let's say 37. Okay, much better price at 37, 38 versus 43, 44. Okay, but again, what's worse is now it just keeps going, and never come back, and now you totally miss the move. Okay, so that's why we have the scanner, this particular scanning condition in place. And in my mind, this is when it becomes useful, even though other applications are possible depending on your trading plans again. Okay, Mark, my scan came up with all options showing. How do you change it to just stock symbols? Yes, so pay attention here. Okay, we got 2 selections. Okay, one is primary pivot breakout vertical spreads, and the second is options for primary pivot breakout vertical spread. So if you select the one above, you will get stock symbols. If you select the one below with the word options, you will get options symbols. Okay, so please, Mark, click on the one above, okay, and let me know if all is good on your end and you got the results, okay? Cool. So I am gonna change now to the Gapper and Special Strategy Scan group, which again, it's hopefully self-explanatory, so we can go over this fairly quickly. But before we do, can you please give me confirmation about the momentum scans? Is everybody okay with the momentum scans? Let me know, please. I'll take a sip. Wonderful. Thank you, Mark. Thank you so much. I owe you an email, by the way, Mark. Okay, I owe you an email. You know me. Sometimes catching up with those emails take me a little longer than I should, but I'll get back to you. Okay, Joe. Very good. Thank you so much for that. Oh, okay, wonderful. Thank you for those confirmations. Okay, cool. Okay, so Gapper and Special Strategy Scan. So what does that mean? So let me zoom in here. Okay, so obviously this is about gapping stocks. Okay, and gapping stocks have basically two applications. Okay, one of them is for intraday traders. So I would say the majority of users of the platform using this scan is because they trade intraday and they want to take advantage of gaps. And I'll make a few additional comments in a moment. But also gaps could be seen as another way to look at actually momentum, or another way to call it is strength. So in other words, these very strong gaps could also be seen as a confirmation for a long-term investor that was looking to buy or get into some sort of an options trade with some stock for a long-term play. And now, because there is this very strong gap, either up or down, next thing you know, this is kind of an extra confirmation that there is plenty of strength in that direction. So again, it could be used by both groups, but again, most of the times I would expect and imagine that the group using this the most would be the stock intraday traders. Okay, so I'm going to look at stocks gapping up, trading above the open, and of course, it's not too many. Again, the market was falling very heavily on the last trading day, as I said before, so we don't have too many. But again, I'm going to click on AEM, and if I was to zoom in here, so you can see that obviously that was the close on the prior day. This is a daily time frame. This is the open today, and there is a gap, and price is trading above the open. Okay, so that's what the scan is for. But again, when it comes to trading intraday, if I go back to a 5-minute time frame, typically when you have a gap that opens above the prior day high or opens below the prior day low, this is what is normally or commonly called as a runaway gap, and also known as outside gaps. And often there is, continuation on the move. In this case, it was quite disappointing in the second part of the day, but when the market opened and started moving this way, so it was quite powerful. So again, depending on your trading style and methodologies, certain moves, okay, in a very low time frame, it could have been taken advantage of. Okay, and again, a runaway gap typically means it really runs away. Again, the whole S&P was crashing like the world is ending on the last trading session. So obviously, many of those runaway gaps to the upside didn't work as powerfully as in other cases when the S&P was working normally, because the S&P was really rolling over and crashing hard. Okay, but here another example of market open gapping very strong and so on. Okay. One interesting combination of this gap trading above the open or gap trading below the low, below the open, is to combine it with, where was it? With a reversal signals condition that we'll cover another day, but just for you to know, which is today's high is greater than yesterday's high, or today's low is greater than yesterday's low. So now, if you were to do that, so which again the list is about the same in this particular day, so you will now have situations where you do have those runaway gaps. Okay, this is runaway gaps or outside gaps, meaning that price opens gapping and never came back. This is a perfect example of this. Okay, this is a perfect example of this. And again, if you had traded intraday, again, there are so many UFO trades here you could have taken, and almost all of them may have been profitable, right? Given the fact that this is a market behavior that we see often when a stock opens gapping strongly above the prior high or below the prior low. Okay, so again, if I use the same filtering condition back to AEM, for example, but I go back to the daily time frame. Okay, so I'm changing my hat from intraday trader to swing trader, for example. So again, same story. Okay, so for example, price went below the Bollinger Band here, hitting the 200 moving average. Again, this is just a coincidence, but let's pretend for a moment that your style of trading is: I'm going to take a trade only when the stock hits the 200 moving average, and only if after that I got a gap. Okay, because the gap may be seen as the confirmation of a lot of strength in that direction, and the 200 moving average may be seen as a dynamic support. And when price comes there, if it reacts to it with a gap, then you will assume lots of strength is to continue. Let's say that was your methodology. Okay, I'm not even using UFOs here. In my mind, that would be quite weak as a methodology. But again, nothing wrong with this as long as you backtest it and maybe it works well. I have no idea. So, for example, here price came to the 200 moving average, but then the gap didn't take place until this candle. Okay, so what would you do? Well, you would take the trade on that day, and then of course it had to retrace a little bit, and finally it gave you the move. So maybe you had taken this trade and your stop was below the 200 moving average, so you were able to survive the little retracement, and then that was a really powerful trade. So congratulations if that was to be the case. Okay? Same story here. Price came to the moving average. Okay, while it's below, you do nothing. While it's above, you are ready to go. Only if there is a gap, which happened at this moment in time. So that's it. You go for it. Okay, you have that runaway gap that may tend to continue, and there is some money to be made here. Okay, in this particular condition, notice how price came above, but the gap took place below. Here there is a gap, but the gap is below. Here it would be very difficult to determine if you took the trade or not, depending on your rules, because the gap took place right at the line. So I don't know if it's above or below. But anyway, you get the point, right? So the gap is often a confirmation for serious strength in a specific direction. So again, it could be used for intraday trading. It could be used as a confirmation for the swing traders. Okay, so this is the origin or the rationale behind this gap. Largest ranges today is also a pretty interesting scan, which also has a lot to do with intraday traders. So when we look at that, for example, let's look at I'm going to set a maximum price of, let's say, 50. Okay, so let's look at, for example, something a bit more liquid than this. Okay, United Steel Corporation. So you look at this guy, and now you look at it in a 5-minute time frame, for example, and the trading day started here. That's where the trading day started. So the range of trading that day is from here all the way to here. That is a very wide range. Okay, that is a very wide range. Why is that useful? Well, that's useful because of two reasons. Number one, because it gives you a measurement of volatility. Okay, so if you are a trader who likes to trade volatile assets, so you have a wide range, it means that today's trading day has, a sentiment which is quite volatile, and you may want to participate of that. So this is one application. But to me, the most interesting application actually is different. When a range is very wide, then the high of the day and the low of the day become more relevant. Okay, so and why is that useful? Well, because now let's say you have determined that this is the range, and let's say that your methodology has you trade the second part of the day. So after lunch, let's say at 12:30 or 1 p.m. New York time, you come into the market, you look at what the stocks with the widest range ever, and these are the stocks, and you have the high above, you have the low below. Okay, and therefore to you is now okay. So that stock is trading here now. If it gets to the high, I'm going to short. If it gets to the low, I'm going to buy. Okay, so the stock went to the low, and then you bought okay, and then here there was some money to be made. Of course, every market opportunity will be different, but the point of what I'm sharing with you here, let me see if I find another example, FCX, for example. So the point of what I'm saying here is that when the range is very wide, okay, so the high of the day and the low of the day are more relevant. In this case, if you came back to trade around one or something like that, so you're here. So basically, you are trading at the low of the day, so then that's not relevant. Okay, you kind of need to have one of those pivot indications below and one of those pivot indications above and below, so you know that the low and the high are relevant, okay? Which in this case, we only had it on the high. Let's see if I find an example that gives me what I want to show you visually, okay? Yeah, so this one, for example, okay? So we have the high is here, the low is there, okay? So when price came back to the low, you can take a trade and make some money, which again, in this case here, it looks quite disappointing. And the reason why it's also because the S&P was crashing like the world is ending. So therefore, almost no stock out there had power to fight it and go back higher significantly. And therefore, you got some move to the upside, but very little, okay? But again, the point is this low of the day becomes more relevant because the range, the trading range, is very wide, which is what we are scanning for. Okay, we are scanning for the largest ranges today. Okay, that's what we're scanning for. Okay. Any question? How's it going so far, my friends? Let me know. I'm about to move into the next 4 scans. I'm going to cover the next 4 scans in 4 minutes. Why? Because basically they are the same. We got daily, daily, weekly, weekly. So whatever we cover for daily applies to weekly, but it's a different time frame. We got bullish and bearish, bullish and bearish. So whatever I cover for bullish, the reverse is true for bearish. Okay. So I'm just gonna cover one of those scans, and basically I'm covering 4 in one. Okay. But again, let me know how did it go with the gapper special strategy scan. So I know if all was understood. Okay. Perfect. Okay. So now daily bullish candlestick. Okay. Let's talk about this. Okay. So in the world of technical analysis, okay, if you know about this world, if you have read trading books, probably you heard about candlestick patterns, as well as uh, candlestick for candlestick patterns, okay, and you have chart patterns and candlestick patterns. So chart patterns represent formations on the chart that may tell you more about the market psychology, such as a pennant, a flag, a triangle, things like that. Candlestick patterns tell you more still about the market psychology, but more in a short term when it comes to the price sentiment that is happening, which may give you an indication which confirms that the market is likely going to continue in the same direction it's been moving before, or the market is likely going to reverse. Okay, and those candlestick patterns, are very well studied, very well known. You find them in all those trading books, or plenty of articles on the internet, and so on. So you can research for that if you need to. But basically, there are a few patterns. I mean, there are many, okay? But there are a few patterns which are the most classical, the ones that have been proven to be the most powerful ones. And those are the ones that we scan for within the platform, okay? By the way, thank you for your comments on the chat box, guys. This is appreciated. Thank you for confirming you're following. So, the doji candles, the engulfing candles, the hammers, the harami, Japanese word, careful, not the one from India with Hindi language, okay? And then the morning star. Those are the most classical and most powerful chart patterns, okay? So let's begin with doji, for example, okay? So if I scan for doji, okay, and I load any of those charts, and by the way, all of this is in the daily time frame because I selected daily. So we are now having a chart formation giving us an indecision candle. Okay, now if you're a purist, you may tell me, wait a moment, a doji is exactly like this, like exactly like this. That's a doji. And this is not exactly like that. You can see the body is a bit more towards the bottom portion of the candle. Okay, I get it. In the scanning tools that we have developed, we've created a little bit of flexibility because, again, when you try to be too strict in trading, you have multiple issues. Number um, one is actually a psychological impact where you have this perfect candlestick pattern and then it doesn't work, and then you totally lost your self-confidence and your confidence as a trader, and you basically stop trading something that actually may be useful. So again, instead of being that perfectionism, we are more in the pragmatic side, and also because, for example, stocks are very fragile as an asset. They depend on the S&P, on the sectors, on the competitors, as we always say. So in a market like the last trading day, where the S&P was crashing pretty heavily, well, it's going to be very difficult to have a doji candle, which is like a pure doji. Actually, that would be more bullish than doji. Doji means indecision in Japanese. It's typically a candle where after a doji, you basically price stopped with indecision, and you may have a reversal, you may have continuation after it. There is indecision. Well, guess what? If you had a pure doji in a day where the S&P is really crashing like the world is ending, that's actually very bullish to me. Not only bullish, it's very, very bullish, right? So again, we are trying to be very flexible with the interpretation of candlestick patterns, and therefore you will find that different stock may have candles that look slightly different. Okay, and for example, in this case, you look at this and you'll be like, how is that called a doji? Oh, sorry, I'm looking at a 5 minute time from here. Wait for that, guys. So how is that called a doji? Well, this one is the same I said before, right? Same visual that I said before. What about BLDP? Okay, well, same as I said before. What about DKNG? And again, that proves the point that when the S&P falls, or most stocks tend to fall. Notice those patterns tend to be same. I'm going to try one more and see if I'm lucky and we see a little bit of a different visual. Look at that. So now we have a move to the upside. Okay. So again, two things. Okay. The scanner, it's giving you what the prior candle was, not the current candle. What the prior candle was, because you want to act on the next candle following, in this case, the doji candle. So the candle that we should be observing is the prior candle. Okay, so let me rephrase and redo the exercise. ADPT, that candle here, okay, you may say, oh, that's a hammerish candle. Okay, you may say that candle more than a doji is hammerish. Okay, well, yeah, again, if you were to go back and look at the market condition the day before, so that would be acceptable as a doji. Okay, so that's what the scanning engine is doing. It's adding a little bit of common sense to the theory of candlestick patterns, trying to help. Okay, so look at that. That's a pretty bullish doji, like very bullish with a close on the top. But again, the prior trading day, justifies it to be called a doji. Okay, so keep that in mind. Basically, any candlestick that you pick from here is going to be bullish doji, bullish engulfing, hammer, bullish harami, morning star. So again, if you look for haramis, we have one. Okay, so you can see how there is a small body there, partially engulfing with the prior body. So again, all of those things are being scanned, adding common sense to the classical theory of candlestick to make this more flexible and potentially more powerful, if any. Okay, so now, of course, if instead of bullish you select bearish, okay, for example, a hanging man, so we are going to see now cases of markets where here's the hanging man and then price falling down. So we're going to see cases of bearish moves instead of bullish moves. If instead of daily you look for weekly, so for example, if we look for weekly hammers, we have none. Of course, the market was falling very hard, so that's going to be a tough one. Let's look for a harami. Maybe for a harami may be easier to find. So we have GPS, for example. So if I look at the daily time frame, it looks like that. But if I look at the weekly time frame, okay, so here you have it. Here is your harami forming within the body from the prior candle. But now, what do you notice with the weekly scans? Okay, because you have the whole week to take the trade, then the indications for candlestick pattern apply to the current candle, not to the prior candle. Those are important considerations. With the daily time frame, the candlesticks that are being found are the prior day, where with the weekly time frame is the current candle. With the current candle is 5 days. Okay. Again, I guess it makes sense. Okay, it's out of being able to use it, right? It's out of being able to use it, so you don't miss the move, and you know when to act. Anyway, we surpassed by 4 minutes the ending time for the session, so I'm going to stop it here. Again, this section on candlesticks is, to be honest, very simple. If you understand candlesticks, it's very simple to understand. There is very little to discuss. If you don't understand candlesticks, probably you won't use it. But again, you guys, please, last confirmation before we say goodbye. On the chat box, I'd love if you could confirm all is good. And we will call it a day. And we'll continue on the next top session. I believe it's going to be in 2 weeks from now with the rest of the scans. And hopefully I'll be able to go all the way to the end in the next session. So then we're going to be able to focus on other tools built in top. Cool. Thank you, guys. Thank you so much, Mark, Joe, and everyone else. And if you're watching this recorded, this is always a pleasure. I'm always especially grateful when we meet on the Sundays. I'm always very grateful, and I'm always, having a very good time here with you guys. But on the Sundays, I know there are many other family commitments and other things of that sort. And for sure, super appreciative that you guys are choosing to join me. So it means a lot. And again, thank you so much, guys. You like candlesticks for closing. That's a very smart approach, Mark. You know what? That's great. You can create. I basically focused the conversation today on the matrix to find new trades. But what you could do is you could have a list. You can create a list that you use of the trades that you're currently running, and then scan for it on a daily basis to see if any candlestick formation implies or suggests to close a trade. Okay, so that's a very smart application as well, and you can certainly do that. Very good, everybody. My friends, you take care, everyone. Be safe out there. And depending on where you're in the world, enjoy the weekend. Hari Raya, if you are celebrating the Muslim New Year. And everybody, you guys take care. Bye-bye.